Ghana, Kenya and Nigeria expected to keep interest rates even as Nigeria's central bank begins its rate-setting meeting today, the first for the year. And Transparency International releases its Global Corruption Perception Index report for 2019 with corruption top on the radar. Thank you for joining us and welcome to Business Incorporated. I'm Chimezie Obi Iwagu. We begin with Africa monetary policy meetings this week as the central banks in Ghana, Kenya and Nigeria are expected to leave interest rates stable as they keep an eye on inflation and wait to see how an initial U.S.-China trade deals pans out. Nigeria's central bank is due to announce its decisions on Friday as the rate-setting meetings begins today. Nigeria's benchmark interest rate is currently at 13.5%. Citibank expects the central bank to continue unconventional policy measures such as the aggressive use of open market operations and the cash reserve ratio to control liquidity. The CRR is currently at 22.5%. In Ghana, the central bank is expected to keep rates steady at 16%, also to be announced on Friday, while Kenya is expected to keep rates at 8.5% on January 28. Economists say interest rates in Africa, which ranks second in size and population among the world's continents, remain too high for consumers and businesses to access, although the South African Reserve Bank surprised with a cut last week. And to the markets, it looks like the markets in Africa is not insulated from the global market rout over the fear of the coronavirus. At intraday today, all the markets we track here were down, with South Africa JSE index taking the major hit, down 0.84%. Here in Nigeria, the all-share index was down 0.15% as at intraday. In Egypt, the EGX 30 also posted losses of 0.17% as at midday Nigerian time. The Kenyan bourse ended Wednesday's session 0.39% down. In the Middle East, Abu Dhabi bucked the trend to trade the opposite direction at intraday, up 0.20%. The Dubai index was down 0.38%. In Qatar, the market had given up over 0.5% as at intraday, while Saudi Arabia was also 0.5% lower. And stocks in mainland China dropped on Thursday, leading losses among major markets regionally as the death toll rises in China due to pneumonia-causing virus outbreak. The Shanghai Composite fell 2.75% on the day to around 2,976.53, while the Shenzhen Component dropped 3.52% to close at 10,681 points. The Shenzhen Composite also declined 3.45% to end its trading day at approximately 1,756 points. In Hong Kong's Hang Seng Index also fell 1.89% as of its final hour of trading. Elsewhere, the Nikkei 225 in Japan slipped 0.98% to close at 23,795 points, while the Topix Index also shed 0.78% to end its trading day at 1,730 points. South Korea's Kospi also saw losses as it declined 0.93% to close at 2,246 points. Meanwhile, shares in Australia declined on the day, with the S&P/ASX 200 falling 0.63% to 7,088. Well, talking about the coronavirus, after a day of talks in Geneva, the World Health Organization said it wouldn't declare a global emergency over the new virus yet. But with more than 500 confirmed cases in Chinese city Wuhan, temporarily shutting public transport to try to contain it, some are questioning what impact the outbreak could have. Let's hear from Juliana now. Hello, Juliana. Good afternoon. Well, is the coronavirus weighing on London yet? How is this impacting on shares?
Well, it's certainly having an impact, Chimezie. Good afternoon. I think there are global fears that this could potentially be a pandemic, and I think it's the timing that's really affected the equities markets all across the world, because it is the Lunar New Year holiday and millions of people within that region are expected to be travelling. Now, we do know from the Chinese authorities that the Wuhan residents have actually been quarantined. So there are 10 million people that cannot leave the Wuhan province, which of course is causing turmoil, and that in turn has affected the market. So at intraday in London, the all share is down 0.27%. The FTSE 100 is also down 0.26%, and the FTSE 250 down again at 0.35%. Same in currencies. The pound is down on the dollar by about 0.08%, down on the euro by a similar amount, 0.09%, and also down on the Japanese yen by 0.32%.
And all the way from Davos, the U.S. expects to complete a post-Brexit trade deal with the UK by the end of this year, with the U.S. Treasury Secretary Stephen Mnuchin threatening new tariffs on UK car makers if the UK fails to back down on new tax on U.S. tech firms. How are the authorities in London responding to this?
Well, you know, Britain is staying, well, the British government at least, are staying quite firm. Sajid Javid, he was in Davos. I believe he should be on his way back, and he was at that round table with the US Treasury Secretary. It all comes back to the digital tax, and this is really not for America in itself, but the biggest social media sites in the world generally are American. The British government didn't feel as if the tax that they were paying was proportionate to the amount of money they were making. So in April, they are going to impose this 2% tax. And America, of course, are not happy about it. France had taken a similar route to the UK, but after talks at the World Economic Forum and the threats from Donald Trump to impose tax on French goods, including Moet champagne, the French have decided to not impose this tax, and they were expecting Britain to do the same. Britain said that they are happy to reach a deal, but until a global deal has been created, they will be imposing this 2% tax. And America said that they will also do the same on British cars. So it tends to be a tick for tack at the moment. Of course, at the priority for the UK is to try and negotiate this EU trade deal, which is their highest priority because they are leaving on the 31st of January and they only have 11 months to do so. So even though they still do want to have some sort of trade deal with America, that will be on hold until the EU is sorted out. And at the moment, that 2% digital tax, which is going to be a multi-billion pound earner for the UK government, is still on the cards.
Now, another interesting one from the UK government. Parents who lose a child will receive 2 weeks paid bereavement leave under new government rules. Is this new law a topic of discussion on London streets today?
Well, it's definitely not headline news, but it's very important for bereaved parents. Of course, the loss of a child is something nobody would want and nobody would wish to have. And this whole campaign has actually been going on for about 10 years now. The new law is called Jack's Law, and it's been named after a toddler who passed away about 11 years ago, drowned. The toddler drowned in the parents' pool, and the father was only given 3 days to bereave, and that included the funeral. So the family have been fighting for a few years to try and impose this bereavement pay because it's just so expensive. Of course, once a loved one dies, you're unable to work. There are funeral costs. There are so many things that you have to arrange, and they felt it was important, especially for those who cannot afford it, for the government to assist them with this. The government didn't agree to 4 weeks, but they have agreed to 2 weeks. And it seems to be something that's world leading. This isn't really replicated anywhere else in the world. And so it's been seen as really good news, particularly for that family. And even further, some charities are even saying that for those who are self-employed and for those that are out of work, there should be some bereavement allowance that the government can provide. So it's a really heartwarming, good, positive news story.
That's a good one, actually. Well, Juliana, thank you for your time. Enjoy the rest of the day. And in the U.S., stock index futures fell on Thursday morning. At around 2:30 a.m. Eastern Time, Dow futures were down 42 points, indicating an implied negative open of more than 45 points. Futures on the S&P 500 and Nasdaq were also lower. The spread of the China coronavirus has placed renewed downward pressure on global equity markets, with a death toll rising to 17, and the World Health Organization set to reconvene today to decide whether to declare a global health emergency. Thursday's focus will also be attuned to individual stock moves arising from corporate earnings season, with a strong session for IBM lifting the tech sector on Wednesday. Comcast, Procter & Gamble, Union Pacific and American Airlines are all due to report earnings before the opening bell on Thursday, with Intel reporting after the close of trade. On the data front, initial and continuing jobless claims figures for January are due at 8:30 a.m. Eastern Time. And on global oil market, prices fell to their lowest in 7 weeks today, sliding more than 1% on concerns that the spread of a respiratory virus from China may lower fuel demand if it stunts economic growth in an echo of the SARS epidemic nearly 20 years ago. Brent crude futures were down 82% to $62.39 a barrel, and earlier dropped to the lowest since December 4 after falling 2.1% the previous session. U.S. West Texas Intermediate futures fell 82 cents to $55.88 a barrel after earlier falling to the lowest since December 3. The contract declined 2.7% on Wednesday. However, amid all the concern about hits to demand, supply remains plentiful. And gold prices edged lower on Thursday as cautious investors awaited a policy decision by the European Central Bank due later in the day, although mounting concerns over a virus outbreak in China provided a floor under prices. Spot gold was down 0.1% at $1,555 per ounce. U.S. gold futures were unchanged at $1,556. Among other precious metals, palladium advanced 1.6% to $2,511 an ounce. Silver fell 0.2% to $17.77 per ounce, while platinum shed 0.2% to $1,009. And Transparency International has released its Corruption Perception Index report for 2019, showing majority of countries showed little or no improvement in tackling corruption. According to the report, corruption was more pervasive in countries where big money can flow freely into electoral campaigns and where government listen only to voices of wealth or well-connected individuals. New Zealand, Denmark, Finland, and Singapore had the lowest corruption index, while Somalia, South Sudan, Syria, and Yemen had the highest corruption index. In sub-Saharan Africa, Botswana, Cape Verde, Rwanda, and Mauritius had the lowest corruption index. Nigeria ranked 146 in 2019, scoring 26 compared to 2018 score. Okay, let's quickly cross over now to Europe to see what the market is looking like in the face of the coronavirus. Of course, Conrad is there to tell us about that. Hello, Conrad. Well, a quick one. In a few minutes, the European Central Bank, of course, will update its key interest rates. At the moment, banks in Europe can borrow at 0% interest from the Central Bank. And when banks put deposits on accounts at the ECB, they have to pay 0.5% interest on this. That's the so-called negative interest rates on deposits. Any changes expected today?
No, Jimmy, not in terms of interest rates. This is only the second press conference that Christine Lagarde is hosting as ECB president. And the markets are not inclined to believe that she will really change this fundamental the fundamental reading of interest rates in the Eurozone. What is expected from her, though, is what she means by a review of the strategy, the monetary policy strategy by the ECB. Lagarde already has said every stone will have to be turned and every option will have to be examined in a strategic review, and that makes people on the markets, of course, speculate what that might mean. Potentially the 2% price inflation target that the ECB has might be put into question. Remember, this target dates back to the year 2003, where everyone in the world was concerned about higher inflation. But for many, many years now, our consumer price inflation here in the euro area has been far lower. So monetary policy experts are discussing, should the ECB not return to a more normalized level of interest rates, despite the fact that the inflation target is not regularly met? That is something that Lagarde will have to talk about at the press conference later this afternoon.
Well, let's keep an eye on that, and we'll talk about that tomorrow. Enjoy the rest of the day, Conrad. Or we'll take a quick break, and when we come back, we'll look at the domestic commodities market. To stay with us.